Interest rates are up, condos are booming, and is the party over for the freehold market? In this video, I'm going to talk about three things. Interest rate bumps have begun. What does this mean for buyers and sellers? Condos are seeing a lot more action. Why is that and what can we expect? And offer dates are slowing for detached homes. Are bidding wars coming to an end? But before I do, don't forget to subscribe to the channel if you enjoy this content and hit that like button if you like this video. And if you don't like this video, be sure to hit the dislike button twice. If you are looking at properties online and you're wondering what something is going to sell for or what it's worth, feel free to scroll down and click on the link below where you can access my calendar for a quick 15-minute chat whenever you are most available, or feel free to send me an email to adam@visionrealestate.ca with the property address, and I will send you my own personal opinion of value on that property within 24 hours in a nice personalized little video. Getting started, the Bank of Canada raised interest rates on March the 2nd. Now, this should be no shock to anybody, and if you've been watching my videos for the last few months, this has been well expected and predicted for a long time.
Governing Council took the decision to raise the policy rate by 25 basis points to 0.5%. This is the first step on that path.
Frankly speaking, it probably should have happened a little sooner because inflation is chipping away quite aggressively at our dollar, but fears of Omicron earlier this year forced the government to keep them down a little longer. So what does this mean for you? Well, it means if you're a buyer, you should be contacting your mortgage broker right away and locking in a rate. Why should you do this? Well, if you're buying a house, you're not just buying a house, you're actually buying a monthly payment. And as interest rates go up, those payments go up. So although your income may not just explode overnight, your payments might. If you're a seller, what does this mean for you? Make sure you qualify your buyers. You should be asking questions about where the money's coming from and if they're moving from another place, have they sold it yet? Those kinds of things. Try to negotiate a shorter closing and get a bigger deposit. If the market shifts due to interest rates, your buyers may have a bit of a mismatch when it comes to appraisal values from their bank, and that problem will fall squarely in your lap. So negotiate a shorter closing so you are minimizing the window of opportunity for bad things to happen and minimizing your exposure. Let's talk about condos. Condos are firing right now. Why is this happening and what can you expect? As interest rates climb, buyer pools shift. When buyers are forced to not bite off more than they can chew, it creates a buyer pool that looks a lot like the shape of a pyramid, where you have most of the buyers at the bottom in terms of price brackets, and the higher in price you go, the less buyers there are for those properties. Then we hit COVID and everything changed. All of a sudden, interest rates were near 0%. And when that happens, all of a sudden buyers can afford a whole lot more. When now everybody's forced to work at home and the kids are home from school, condos and other smaller properties seem to be a bit tight. So a lot of buyers started to migrate and use their newly found purchasing power to purchase freehold properties or bigger properties than what they were in. This started to make a shift in buyer pools where now we had most buyers congregating at the entry-level freehold market and less buyers looking for condos. And then of course we still had a bit of a gradient when it came to the higher priced luxury homes. Fast forward to now. The money lending market is tightening up, and what it's doing is forcing buyers to be a bit more conservative yet again. As their monthly purchasing power starts to go down and their income remains the same, they will start to migrate to lesser priced properties. This is essentially forcing that diamond-shaped buyer pool back into a pyramid-shaped buyer pool where we now have expanded demand at the bottom. And what is at the bottom price brackets? Condos. This is also historically what happened in 2017 and 2018, where we saw the same thing with interest rates and stress tests affecting the purchasing power of buyers, and condos had a massive spike then as well. So naturally, we find ourselves at the third part of this video. Offer dates on detached properties are slowing and some of them grinding to a halt. So is the party over for the freehold market? Well, let's take a second and look at this interactive price chart so we can see what the last few years have looked like. Is this sustainable? Of course not. Given what we know about interest rates and buyer pools shifting and the condo market, we can expect prices to start to level off a little bit for the freehold market moving forward into 2022. Does this mean a doom and gloom apocalyptic crash for the freehold market? No, it doesn't. It just means that we're gonna have to cool our expectations from what we were seeing in January because the market has changed a little bit. Having said that, if you're looking to buy, do not wait and speculate on the market. If this is going to be a primary residence for you and you're going to be living there and you're planning on a typical 3 to 5 to 7 year hold on your property, you're gonna make your money just fine. So if you see something you like, go ahead and fire on it, move on it. Just make sure that you've locked in your rate before you start your search. That's it for today. Stay safe and take care.